Hi guys, this is Kearns and this is lesson 12. We're gonna talk about Trendline, and this is a very interesting subject. And as I like to start all my lesson, I'm gonna start with a quote of mine. An average and consistent mind can shine brighter than a lazy genius. Specifically when it comes to this particular field, you have to be consistent and build your skills, sharpen your skills on a daily basis. It doesn't matter how smart you are, you need to put on the hard work in order to expect some kind of reward. Now, talking about trendline. Now, trend lines are very simple, but they are extremely powerful. Generally, they are a straight line connecting a series of ascending bottom. We call that an uptrend line, or a straight line connecting a series of peaks or tops is called a downtrend line. Generally, you'll find that in a downtrend. They are dynamic supports and resistances. Remember when I was talking about support and resistance, we were placing horizontal lines. In this situation, these are dynamic support and resistances. What I mean by that, very real quick, okay, in an uptrend, for an example, you have all this right there, or in a downtrend, maybe something like that. Now, I told you this zone or swing low or different type of low or bottom. Now, a line that connect all these are called trend line, or in this situation that's an uptrend line, and this one that's a downtrend line. Pretty clear and simple. But in this case, they are considered as dynamic support and resistance. It's not just a line that stays static. It's a line that move along the trend and modify itself, and the price essentially react every time it get close to it or every time it touches it. Now, how do you place a good trend line? Well, there's a couple of simple principles that I want you to keep in mind. You must respect those rules. You must do your best to not include wicks. So, when we're gonna talk about different touches, or when the price approach a trend line, it's better to use candle close and opens than wicks. So do your best to exclude those wicks. You must connect 2 or more peaks on a bear trend, and then you have to connect 2 or more bottom in a bull trend. Okay, 2 peaks are acceptable, 2 peaks or bottom are acceptable, 3 are perfect. So the more touch, the better it is, the stronger is the trend line. I'm gonna read about that too. And then at the end of this, it's a matter of common sense than sets of rigid rules. So what I mean by that is trend lines over time might need to readjust based on how the price is correcting himself. Now, this is a type of thing really only practice can give you a real grab on this. But through this lesson, I'm gonna do my best to kind of give you a real view and understanding about this particular subject. Like I said, you need at least two torches. It's supposed to be two torches body to body. Let's go over some example. Now that's a trend line. This is a daily time frame, Bitcoin US dollar, and then I'll place this trend line for you. I realize it's better to just go ahead and grab the pictures and put them on slide. Here we start, that was a swing high. In this situation, we have a first touch or approach, and then that's a third one. Okay, now this is a strong trend line, and you can pay attention to the fact that this trend line right there, it's almost September 1 to, it's more than 6 or 7 month hold. Now when you get a violation of something like that, this is extremely significant in the market, specifically because of the fact that we are dealing with very big time frames. And remember, I told you about the fact that the bigger the time frames, the bigger the significance of the technical analysis you do in that time frame. In our case, the daily time frame is our main time frame. Now that's how you do it. I'm gonna put, that's a set of different type of trend line, same chart, same time frame, different moment in the market. That was 1, 2, 3, and then you have a break. That was a downtrend line, that was an uptrend line, and another downtrend line, and every time we got violated, you got a change of the trend. Okay. Now, contrary to statics, support and resistance, they can be used as buy and sell signal. Remember, when I was talking about support and resistance, when I was talking about the statics type of support and resistances, and I told you that these can be used as buy and sell signal. In general, every type of technical analysis tool that you use to build dynamic support and resistance, for an example, moving averages, for an example, Fibonacci levels, if you are Bollinger Band trader, generally these create these type of indicators, they create what we call a dynamic support and or resistance. Now these can be used as buy and sell signal, but those lines that are horizontal lines, they just can't be used in order to anticipate a reversal, not to enter a trade. Very important for you to understand that. Now I'll give you an example. I'm just gonna try to get a practical okay. Maybe some of you would like to see, or do you place them in just to practice a little bit. Okay, now when you're placing them, this is that's okay, daily time frame. Okay, so I'm gonna try to place a trend line using this different type of swing. Now it's clearly, this one is clearly an uptrend. You have higher lows and higher highs. Okay, now using these, you might need to place a trend line, and remember, these are more common sense than rigid rules, so you might need to readjust them, but I strongly recommend that you start by placing them using body to body upfront. Now this is must be green. Sorry, this must be green. The reason why is because that's our main time frame, and we use green on our main time frame. Now when you have something like this, okay, that's a trend line. You use that particular tool here, and then you place a trend line. I recommend that you use body to body touches. do not use wicks as much as you can. Now, using this, you might realize that you get a first touch. Approaches didn't touch it, but this is still significant. That's a third time, and then we are here, and that's this trend line is technically still holding. Now, this is almost 7-month hold. Now, when this trend line got violated, if ever it got violated, this is gonna be very important movement in the market. Other stuff that I want you to know: when you double click on a trend line, you can extend it to the left and extend it to the right. And I'm gonna explain to you. For example, if you click and extend to the right, you'll realize that the trend line goes all the way up to the right. See, I'll show you this. It's extremely important. There's a very few traders out there that use them, but they are as important as the trend line. Okay, so in general, just to keep it very simple, that's how you trade. That's how you place a trend line. Okay. Okay. Now, like I told you, they can be used as support and resistance. I'm gonna give you some example about how to use them. How to use them as dynamic support and resistance, and eventually use them as buy and sell signal. Now, that's an example of a trend line. 1, 2, 3, and then it got violated, and then this zone right here could have been considered as an extended zone of trend line. So just like supports and resistance, just like statics, support and resistance, they share the same principle. When they got violated, they changed their role. So if this trend line was dynamic resistance, when it got violated, technically it can be used as a dynamic support. So once you place your trend line and that trend line got violated, then you can use some trading strategy to enter positions in this zone right there, because they turn their rules from being a resistance in this particular situation, from being a resistance to a support. Okay, next then. Now, for an example, that's another one. That's another trend line, pretty steep one. But once you got once you got it, when it got violated over here, okay, these can be used as buy and sell signal. These can be used as buy and sell signal. Like here, the signal got violated. Okay, yes, I realize that. So when they break, they can lead to a reversal or consolidation. Now, essentially, remember when I was talking about the different type of trend, and I told you that we essentially have 3 different kind of trend. Now, if you have a trend line, it was, for an example, uptrend line, okay, or you had a down trend line. Every time this trend line got violated, for an example, in this situation, if we get violated, what happened is generally you have a change in the trend. Now, it can be, in this situation, a change from an uptrend to a downtrend, or a change from an uptrend to a consolidation. So in whatever the case, it's supposed to change the trend even temporarily. Once it got break, the trend gonna change even for a moment, okay, even temporary. Now what happened generally is that in this particular scenario, you're gonna have what they call a formation, a well-known formation that they call head and shoulder. because generally as soon as the trend line is violated, you get a reversal pattern that will tell you that, okay, this is clearly a change of trend. And then if you were long, this is probably not meant for you to close and eventually enter another type of position once you got the trend confirmed. Now, same situation for a downtrend line. You have different rallies. You touched it, approach, touch, and violate it, and we retest it, and we goes in the other direction. Now it might be a reversal, so we might reverse and then go up, or we might simply consolidate it, for an example, in this situation. But the most important thing is, as soon as we get violated, as soon as the trend line got violated, the most important thing is, as soon as we get violated over here, the trend is done. The trend is done. So if you were short here, you close. You do not reduce, you close the short. If you were long here, you close your long position. Okay, you do not reduce, you close here. Extremely important, because that's one of the difference between dynamic trend lines, dynamic support and resistances, and statics support and resistances. Okay, now that's another one. There's the reason why I wanted to see that. Now you have this. Remember, we are in a daily time frame, so these are days. Every single of these candle are days. Okay, now you can pay attention to the fact that this trend line was has been touched many times, many days, many candle. We approach it over here. 2 is okay, 3 is perfect. When it got violated, that's an indication to enter a short position, because the trend might end up reverse. Okay, this is probably the big picture here is probably a bear market. I think it's a bear market, and this is probably a bear rally. Now you remember when I was talking about rallies, and I told you that you do not buy all rallies. It really depends what is the main trend. Now in this situation, that was a bear rally. Now it's a movement in which the price goes up, but that's not an indication to go long. Now if I saw a bear rally, which means the main trend is a bear trend, I see this and I got this, that's an amazing opportunity to short. Okay, that's an amazing opportunity to enter a big short position right there, because that was an uptrend, which was a bear rally. The trend line got violated, so we are sure at 100% that a good trend line that have been violated is supposed to change the trend, even though it's supposed to move from being an uptrend, because everything is about probability. Let me try to give you some example. Now okay, now as soon as this trend line got violated, we are sure that there is no such a thing of rally anymore. So because it's a main bear market, we could have entered a short, because we know that we're gonna reverse and keep going down. Yes, we could have there were still a probability of consolidation, but I'm gonna give you an insight. I'm gonna give you a tip how to expect a reversal versus a consolidation. But in this case, all the conditions were there to short the market. That was a bear market, and that was a bear rally. You had your trend line get violated, you enter a short. 90 and something % probability here. amazing trade. Okay, so that same chart, but I am gonna let you appreciate this formation, a well-known pattern formation known as head and shoulder. Every time you see this is a clear reversal. Once again, that is a change of the trend. Another one, that's a different chart. That's a different chart. Still same. Yeah, that's a different chart. And then you have 1, 2. 2 is okay. 3 is perfect. Once it got violated here, you realize that this trend line that used to be a dynamic support turned to be a dynamic resistance, and this is a good indication to short if your main trend study was a bear market, was in favor of a bull trend. Okay, all right. Now, violation of trend line strongly indicate a change of the trend. Remember, first is change of the trend, but in some situations, some very specific situation, you might get an idea of, is it gonna reverse or is it gonna consolidate it to continue. So what is it is, if the violation happened in a sharp ascent or descent trend line, it is more likely to result into a consolidation. Now, we are all familiar to the scenario. Well, if you have been trading for at least a good 1 year, some situation in which you have a very steep movement in the market. This is extremely sharp, violent rally. Now, when this got violated, it's very rare for this type of violation to turn into a reversal. This is totally different than the image that I just showed you. They kind of look alike, but they are not the same situation. Here, because this is extremely steep, a sharp trend line, this violation, yes, we had a change of the trend, but it's a change from a bull trend to a sideways. So you have a change of the trend here. Remember, as soon as the trend line got violated, the trend is done. We change the trend. It can be from a bull to a sideways market. It can be a bull to a bear. It's pretty easy to play around with this because there is always two probability, because before the trend line got violated, you know that you were in a primary trend, and when it got violated, you only have to choose the right side over here. Okay, now this is a consolidation. This is extremely steep, and probably if you can associate that with other indicators, this would have tell you that there is more probability for this to keep going up than to reverse actually. Now that's another I'm gonna use the same image and we're gonna have to do another one. Okay, now same chart, Ethereum US dollar, weekly time frame. Okay, that's the reason why I'm using the white lines, and this is a downtrend line. Remember, they share trend lines because of the fact that they are, like I told you, they are support and resistance, specifically dynamic support and resistance, and they share the same principle as any support and resistance. Now, because this is a weekly time frame, so this technical analysis, the simple line is extremely powerful. Now this is the 2018 bear market, and you have a touch, a second touch, that's okay. We approach, that's perfect. We touches again, that's 4 touch. A trend line in a weekly time frame that has been touched 4 times. You know, a trend line in a weekly time frame that have been touched 4 times is extremely important in the market. Once you get this violation, the probability of this to be a reversal is pretty high. When you compare this very sharp movement and this one, you could have bet in favor of a change of the trend. And of course, you're gonna use some other indicators, and I'm gonna show you how to do that. But using trend line only could have been pretty profitable right there. Okay, we are talking about big move in the market. All right, now extend trend line, often ignored but as important as trend lines. An extended trend line reverse is its role support to resistance or resistance to support. Now I think I already talked about that. That's another example. If we take those two torches, now those two torches, it's okay, still not perfect because you need at least three torches or an approach, three approaches, torch or approach and or approach, we can say, to consider a trend line as being perfect. Now this is pretty risky because that's just two torches, but here we got violated. Okay, this violated. And it wasn't a very trend line that important, but what I want you to realize is that in the way back up, this serve as a dynamic resistances. Now if you are a trader and you have to choose between dynamic and static support and resistance, you should trade using dynamic instead of statics, because of the fact that they create more opportunities when it comes to enter or trade. But the statics one, they create more possibility of exits or position. For example, if you're not using other indicators to get the best exit in order to maximize your gain, you might just use sets of support and resistance, a set of dynamic versus a set of statics, just to find your entries and exit. Okay, we're gonna talk about that when we're gonna talk about how to build strong strategies, and I'm gonna show you how to do that perfectly. Now in the next forthcoming slide, I intentionally put a mistake. So this is the first time I'm doing this, so I'm gonna ask you to put the correct, so you're gonna have to place the trend line yourself, and then you're gonna have to put it the correct way. Technically that's it. Now in the next chart, I am gonna give you we're gonna talk about extend trend line, and I am gonna give you some very interesting, this is probably an interesting technical analysis, pretty interesting, I'm gonna say. If you have been exposed to cryptocurrencies around 2016, you are certainly familiar to the bull market that ended up December 2017. If you've been in the cryptocurrency community since 2013, you are probably familiar with the 2013-2014 bull market and the famous bear market of 2014. Now if you just came after a bear market, because we are June 2019 right now, so we just end a bear market around five months ago, and we still not totally recover from it. Now what I'm gonna try to show you is, this is one of the reason why you need to keep your short pretty simple, because the mastery of just a couple of technical analysis tool can go a very long way. Now remember that I told you about extended trend line and how they are ignored by the majority of traders out there. Well, this is generally a mistake, because if you have to use a tool especially when you choose a technical analysis tool, you need to make sure that you master it, not just because someone give you a couple of for example, you watch this video. That's just not enough. You need to go ahead and study yourself, do your own researches in order to master the use of this particular technical analysis tool. Now, let's talk about extend trend line. This is gonna be a couple of, remember, you got a homework to do, and you're gonna post the answers on the post, on the comment. Okay. Now, this is a short, and this is a weekly time frame. Okay, weekly time frame. This trend line has been touched 4 times. 4 times. You know, we're gonna have to go over those rules, but this is important here. This trend line have been touched 4 times. So remember what I told you. 2 times it's okay, 3 times is perfect, 4 times it's just the trend line. You don't play with this one. Okay, just don't play with this one. Now, that was in 2011, just 2 months before 2012. We had a bull market, amazing bull market. But these are bear market, and Bitcoin was pretty cheap compared to the price it is right now. And then we had that famous 2014 bear market, and then this trend line is literally 3 years old. So remember, this trend line have been touched many times. This trend line is extremely old. Okay. And then when we use the extend trend line, have you ever think about the fact maybe it was possible to get an idea of where this, because this is the bull market that end up when Bitcoin was around $20 and something thousand. Using the extend trend line, you could have possibly spot the top of the bull market with an extreme precision. And remember, in December 2017, this trend line is 7 years old. And every time this trend line reacts, it gets stronger and stronger and stronger. And we are not done yet. We're not done yet. Now, I'm going to give you another example. This is going to blow your mind. Maybe you did invest in Bitcoin in the one moment. Maybe you did invest over here, right? Maybe you did invest somewhere over here, and then you've been suffering since then, and it's been more than a year now. And then maybe once we made it to 3 and something, let me see, $3,450, you say, you know what, I am done. I'm gonna close. I'm gonna sell all my Bitcoin. Just by using trend line, I'm gonna place a second trend line, because this trend line is technically the top of 2 small bear market, because here Bitcoin was around $12. You wish you had to buy it right now, $12. I mean, I wish. Using just those 2 tops, these are big bull. They used to, because here Bitcoin moved from around $2 to anywhere $7. Remember, the technology was pretty young and everybody was skeptical about it. Now, using this simple trend line, this trend line is only 1 year old. Using the extended trend line, you could have an idea of where the bear market of 2014 gonna end. You could have spot the end of the bear market of 2018 with an extreme precision. And look at that. Look at our awesome and how the price managed to respect this particular trend line. You know, this trend line is being respected because this trend line is 7 years old. Okay, now there is a lot of characteristic when it comes to this kind of technical analysis tool. Trend lines are simple, but they are extremely powerful. They give you an idea of trend, they give you buy and sell signal, and then I am gonna show you, they even give you how to spot target when you enter a trade. Now let's keep going. I know there's a confusion between logarithmic and arithmetic scales. Now when it comes to trend line, there is the difference is pretty negligible, but I strongly recommend everybody to use the logarithmic chart. That's the one I'm using for the class. You can use it, and when you're done with the class, you can feel free to do your own experiences. Now let's talk about principle of trend lines significance. Remember, the length of the trend line is extremely important. Big trend line, big signal. Small trend lines, small signal. We have to go back on this. See that these are two trend lines that are 7 years old. Now remember that I give you a homework. You have to place them in your chart, and then you have to place them in the right way. There's a mistake, even though they are perfectly they are pretty precise. I mean, look at, you could have spot the top of the bull market of 2016 2017. You could have spot the bottom of the bear market of 2018 using just two trend lines. You just have to do it and post it the right way. These are almost a decade of information and data and memories in the market, and that's the reason why those trend line you might never have to remove them from your chart, because every time the price get close to them, or every time the price touch them, and more important, if ever the price managed to violate any of them, it's extremely important, just because of the fact that these are very old lines and they are extremely important, and they are being placed on a weekly time frame. Now principle, I think I already told you that the number of time touches or approach, the more touch, the more stronger a trend line. And the same thing applies for extended trend line, because that's particularly the same rules when you are dealing with statics, support and resistance. Okay, now another thing is this, and I told you that I was talking about this. Now a trend line can be extremely sharp. Now significance of a trend line depends on the angle of ascent or descent. Sharp angle tend to be more fragile. The violation of steep trend line often result into a continuation. Now I think that I already told you that. I'm just gonna give you a couple of examples. Now I failed to place the date. I'm gonna be more careful about this. This is still Bitcoin US dollar. Bitcoin was being traded in this particular bull market. We move, I think it was anywhere between 2012 and 2013, anywhere somewhere, and we had a violation of the trend line. The violation, I think it was this. We had a violation of the trend line. This is that's another principle. This is not pretty. This is not a sharp. Yeah. So we have a violation. As soon as we got a violation, we know that we have change of the trend. Now I'm gonna pull out the white board. Now, in order, anytime you have a trend line, there is two situations in which you can expect the trend to move from a bull market or a bear market, or a bull trend or bear trend. There is two particular situations in which you can expect the market to change into a consolidation. The first thing is if the trend line was sharp, like pretty steep, instead of being something like that, pretty steep. Now when it gets violated, this type of trend line, when they are extremely steep like this, or when you are like this, they tend to turn into consolidation instead of total reversal. I think I told you about that. Another situation is when you got a trend line and the trend line have been violated with brutally, like some extreme movement in the market. Now generally this type of huge movement, they end up being consolidation instead of a reversal. Now these are the two examples that I wanted to show you. This is the same situation. Now these two charts, they look alike but they're different. They really look alike, but take a look at the price. Here we were being Bitcoin was being traded between $10 and $15, and here same pair, same time frame, it's just between $100 and $150. And every time you have this, you just have to wait, because this is gonna be very high probability of being a consolidation. So the next slide, I'm gonna explain two principles. The first principle is when the trend line is sharp. I think I did go over this, but I wanted to talk about two situations in which you can expect a consolidation, which means a consolidation is most likely to happen instead of a clear reversal. The first situation is when the trend line is extremely sharp. For an example, excuse me, you had a trend line that is something like that, or something extremely sharp. Now some kind of bull trend in this way. When it got broke, generally you can expect consolidation zone after that. Now the second situation is when you have a brutal violation of the trend line. Now what happened is, for an example, in this situation you might have a very sharp descent, and generally in this situation you are most likely to have a continuation and or consolidation. Okay, now when you have the break of a steep trend line, this is the same case. You can expect continuation and or consolidation. Okay, it's more probable than a reversal. Okay, now this is just a point that I wanted to show just before we switch to the very last slides of this presentation. Now I am gonna show you two of them. Now this is a short. I didn't manage to take the dates, but this is a short between 2011 to around 2020. It's between 2011 and 2013. Now what you can see is that this was a pretty sharp, pretty steep trend line. Not very steep, but the most important thing is the fact that this trend line have been violated. This is the daily time frame with a very brutal movement. In this situation, you can expect a consolidation or in a continuation instead of a total reversal. Now remember, it's a question of probability. This is what is most likely to happen. The second is, now I want you to pay attention to the fact that it really looks like, but here take a look at the fact that here Bitcoin was being traded between $10 and $15, and same case, very identical, but this one is more sharp. Okay, it breaks you know, this trend line got violated extremely with extreme brutality. And then what happened is that you get a zone of consolidation, and here Bitcoin was being traded between $100 and 150 something. So this is a very very specific scenario that I wanted to show you, and you have to keep that in mind. Okay, now there is a question of measuring trend line violation. There is absolutely no way to show you this using text. Okay, so I am gonna start by try to get you some example, and maybe you'll appreciate the fact. I am gonna give you first of all, do you remember this image? Okay, there's one thing that you need to understand, because of the fact that when we enter a trade, we do not stick in front of the screen. We are extremely patient, and our precision is what we need to spot decent target. This is the image of a swing trader. Okay, I'm gonna go to the chart, and then let's go ahead and do some study. Okay, where are we? What just happened? Okay, daily time frame. Now what we're gonna do is called measuring. So I'm gonna try to get a decent trend line. I'm gonna show you now. I am gonna show you how just using a trend line you can enter a trade, set a target, and enjoy a double-digit profit. Remember, we are in a daily time frame, which means our technical analysis is very significant because it's a big time frame. So we're gonna select trend line, and then we're gonna look for one of the best way I like to spot trend line is first and try to find to close or to open, and then spot a decent trend line. Now this one for me is that's a pretty good one. Okay, so this trend line was created from July 2018 and November 2018. This can be considered as a touch, or because we got very close to it 2019, and then it got violated here. Now let me show you how this one is being traded. The first thing you do is this is called measuring. You identify the wave that is the farthest from the trend line. Now in this case, this one is far from the trend line. Now you measure this one, you do not include the wicks. Okay, so we're gonna measure this distance from the trend line right there. Okay, that's the first thing you do, because it's the biggest wave, the farthest from the trend line. Now the second thing you do is you identify the first candle that managed close that violate the trend line and close above it. In this case, because it's a downtrend line, we're gonna place a line right at the close, and then we're gonna take that measurement and we're gonna place it here. Okay, and then this is gonna be our target. Okay, now you might realize that this zone has been violated, but it react as a decent support. Now this is called measuring. Okay, we're gonna have to do this. It's I'm kind of anticipating the fact that we use very specific tools. Now as a swing trader, when I realized that I didn't get any kind of reversal here, what I would do is I will look for another trend line, maybe a bigger one, For an example, this situation, this is one. I might try this. Now this is yeah, this is a pretty strong one. Now it's pretty curious. Now I'm gonna double click here. I think I'm gonna double click and I'm gonna extend it to the right, and then let's see how it goes. Okay, it's two right there. Okay, let's go this one right there. So I have a wave here, another one that's 3, decent touch 3, because the body, make sure I get it right. I'm gonna try to make sure I get it very precise, sniper mentality. So that's a pretty good one. Nice second touch, we get close to it, we react, another one. So let's see. All right, I use the extend trend line, and then here we got violated. Now I am gonna do the same thing that I did here. This is called measurement. I'm gonna measure the distance from this one is the wave that is the farthest, I can say, from the yeah, this one is very far from this bottom is very far from the trend line. So I'm gonna take this one and I'm gonna identify the candle, the first candle that violate this very important trend line, and then this is gonna be my next target somewhere over here. So this is literally 2 trades. Okay, so you can feel proud about it. We did manage to identify a swing, and then we did manage to identify a zone of entry, a zone of exit. Now, because remember I told you about the daily time frame. Now, using, let's say that this kind of movement, they might happen in our absence. Okay, so generally what I do is, as soon as I get this break right here, we're gonna talk about the Fibonacci. I'm gonna use the Fibonacci for an example, and then try to enter anywhere here. But generally, when we're gonna talk about how to use this, how to get very precise entry and exit, I'm gonna show you this, and I promise you'll be able to understand it, because I'm gonna be very detailed about them. That's one example. All right, let's go on Bitcoin. Let's see, okay, we're gonna use a big time frame. I'm gonna use a big time frame. I'm gonna go all the way up to 1 week. Okay, so we're gonna try to enjoy this for an example, and here, and I'm gonna use the white color because that's my trend. Okay, and then about this. Okay, about this. We don't need that now. So that's the weekly time frame, and that's trend line that is more than, that's a trend line that is more than 1 year old. Now, a trend line like this is extremely powerful in the market. And remember when I told you that this type of trend lines, and remember the difference between trend lines and statics, support and resistance. Trend lines can be considered as dynamics, support and resistance, and because of that, you can use it as a way to enter a trade. Now, remember when I was talking about using the weekly time frame as a trend sturdy time frame from the context of swing trading, because we are trading on the daily time frame. this is considered as the end of the bear market over here. So I could have I'm gonna mark this candle. This is a very, very important candle for that very moment. And then what we're gonna do is that we're gonna measure the bottom that is the farthest from the trend line, in this case this one, and then we're gonna take it, we're gonna bring it anywhere here. Now this will have been my trade from a swing trading perspective, okay? Because what happened is generally what happened is, let me try to get what happened is, generally what can happen is, if this is in a situation of real change of the trend, for example, we broke here, and then this is the bear trend literally change here. Now what happened is this zone can be considered as a real and decent first resistance. If it breaks, we can expect a movement like this, bounce, and something like this. Now when I made it here, really depends, because we're not gonna use this only. We're gonna use some other indicator to look for reversal in this zone over here. But in general, I'm gonna reduce my position. I'm gonna reduce by anywhere around 50% size. So whatever I did here, I'll close 50% here, and then I'm gonna keep an eye on this movement and look for moment to re-enter. Remember, I'm not shorting here, because remember, I never go against this particular trend study, because that's the weekly right there. That's the weekly. So I don't trade against the weekly time frame. Okay, so what is the best thing is look for reversal. I'm gonna reduce my position by 50%, look for reversal, look for retracement in order to re-enter. Not shorting. I am not shorting here. Okay, it was okay here to short, but not here. Very important to understand this concept. Maybe I should give you another example. I don't know. This is gonna make this video pretty long, but I think this is interesting. Or what else? Maybe we should try Ethereum. Oh, I did not remove that. Not bad, huh? Okay, that's the weekly time frame. And let's try to see something interesting. Remember, here we are just using one technical analysis tool. We are just using the trend line. So we go green because it's the daily time frame, and then I'm gonna try to get something here. Yeah, this one is decent. Okay, this one is decent for so I got a body here, a very close approachment, and then we violate the trend line here. So I'm gonna mark this candle, and then, like I told you, this swing is extremely interesting. This string, it's a higher low, but we don't know yet what's gonna happen. But when this thing got broken, when you got another candle, another daily candle that managed to close above that particular trend line, that is literally what, almost more than 6 months hold, then you might use, I'm gonna show you how to place this and how to use it and when to use Fibonacci. You might use your Fibonacci to enter a trade here. So you buy on retracement. In this situation, maybe you're gonna use your 4. You might need to use your entry and exit to get a little bit of better understanding of this, because you know, when you identify this zone, this is the swing, and then you identify the first swing that managed to break this trend line right there, and then you buy on retracement. That's not an indication to short, that's an indication to buy on retracement. Now remember what I told you about those trend lines. I'm going to remove that. What I told you about those type of trend lines, these type of trend lines, remember that. Now here, and remember, this is my this is not my main time frame, so I'm switching to red. Pretty interesting, huh? Just make sure I get it very. So this trend line is missing one touch, because there's only 2 touch. It's barely okay to trade using it, but the point is, you got a brutal violation of this trend line, and when it comes to this type of violation, they are barely the probability of being a reversal is very low because of that kind of movement. And that's the reason why I told you that you might need to use an entry and exit time frame just to get the best entry, so you're gonna maximize your profit and just to put your trade in the best position as you can. Now this is interesting because you got a trend line. Remember, that's the reason why colors are important. You got that green line, and you know that is from a big time frame. It got violated, and then a trend line in the 4-hour time frame, which is your entry and exit time frame. You know what happened when this type of violation are brutal. They are rarely reversal. Now this is a good buying zone because they are rarely reversal. So this is gonna be probably gonna be a continuation or a consolidation. So this is a moment when you need, for an example, if you're Elliott wave fan, you know that you're gonna count 1 2 3, and then this is probably where you're gonna place your Fibonacci, and then here would have been the perfect and clear shot. Bam. Okay, so this type of things, they are pretty advanced. There's a lot of concept that we haven't touched yet, but that's a type of an example of how I prepare my technical analysis. And the beauty of that is I have so much time to prepare for that. I mean, there's no rush to prepare for that. I mean, that's literally the type of trade. For an example, first thing, you have higher low. Second important point, we violated. I mean, it literally take 2 months for that swing to be a good swing. Then when you got it, you prepare the trade. You have plenty time to prepare your trade. You enter a good position, and then you enjoy, I know, almost 100% gain. So not gonna give you more than that. We're just gonna stop here because that's way too much information in just one video. This is swing trading and it's glowy, and remember, that is just one tool and there is so much more to learn. Okay, let's go back on the slides. You're gonna like this image. I'm gonna make sure that you like it. So that's it for the lesson. And like I always said, I know that I'm not the only one here to